This is the best reward to risk ratio trading I've ever done, and it's not even close. What's going on, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I'm going to show you my support resistance breakout trading strategy that gives you the absolute best reward to risk ratio that I've ever seen. And again, like I said in the beginning, it's not even close. So please, guys, remember, this is not a financial advice. I'm not a financial advisor. This is me sharing a trading strategy. You can use it if you like, but remember, you manage your own money and you manage your own risk. With that being said, if you like this video, please hit the like button, subscribe to the channel, all that good stuff. And with that being said, we're going to hop right into the charts, and we're going to start with Ethereum. And Ethereum is a trade that I've been actually doing a lot recently. I've been trading Ethereum quite a bit, and I want to show you real quick some of the rules to this trading strategy. You want to be with the trend. You do not want to long while you're under this descending support resistance, this diagonal support resistance. You don't want to long anywhere in this area. This would be a shorting area. You trade with the trend in this point. But once you break it, you can definitely breakout trade this to the long side. And that's what I did initially. The first trade with Ethereum was a break of the downward trend and a hold of the support resistance line. And once I saw this wick candle down and then buy right back up, so it held above the horizontal support resistance and it held above the downtrend line. That was my buying trigger. So I bought right at the start of this next candle here, and that puts me at a risk to reward of 9.82 to 1 with a stop loss that is less than 1%, a less than 1% stop loss. And this trade took a little bit. It was like a 4-day trade, but it paid out, and it was 8.9%. So again, I'm trading 20x leverage, and this is the only way I'm able to trade 20x futures, because I can keep my stop loss for the most part between 1.5 to less than 1%. And that's the only way I can take these trades on 20x without getting crushed with stop losses. So rule number 1, you have to wait for confirmation. This here, if you were to say, you close your candle, you're closed out on this candle, you're like, man, it wicked above, and then the next candle closed above, I'm ready to go. I'm going to go long again, and I'm going to long it up to this line. You are going to get crossed up. You are not going to win this trade. You're going to get stop loss, and it's going to be ugly. It's going to look something like this. But you see this area I have highlighted in yellow. You want to take these trades when they are as close to the trend line as you can get them. Now, starting this, we don't have a trend line yet, because this was the bottom, and I didn't make the trend line until I had this touch here, and it made sense. This was an angle that made sense to me, and the price came up, broke this line, came up, came back down, came up, came back down. And once it started to really go sideways and not continue down, I thought that this was a good area to start the trend line. This area here, where we were fighting and we were below the trend line, or we're below the support resistance line almost the entire time. We can never really break above it clean. We finally broke above it, and it could have been tempting to enter anywhere in this area, but the idea was to wait and enter as close to the support resistance and trend line as possible. So this was my entry here. It was a sell down below and bought back up the very next candle, and then that was my trigger, because we were very close to the overall trend line. So then this support resistance range, if it goes 2 or 3 candles, then it's got to break the trend line down for it to stop loss me. And at that point, I don't want to be in that trade anyway. I'd rather get stop loss at an 8% or a 0.8% loss than to be in a trade too long that's just going to start breaking the upturn anyway and start a new downtrend. So here, this was a 5.5 to 1 reward to risk ratio, and it played out beautifully. And again, we got to this top, and it looked like we were going to break out, and it didn't. It sold back down because price action wants to get back to the trend. Price wants to get back to the trend line. You don't want to take a trade for a breakout trade that is far above or far away from the trend line. Remember that this will likely be a solid breakout trade. If the trend holds here, this is actually starting to look a little scary. I might have to adjust the trend line a bit, and don't be afraid to do that. If your trend line is just slightly off, you can adjust it slightly. But yeah, this could hopefully just be a wick and then buy back up. But yeah, if this breaks, if the trend line starts to get, if the support resistance line starts to get tested in this area, this is an area where I would pick this up as a breakout trade, and I would trade it up to this next level. Anywhere in this area here, we're too far away from the trend. It's likely not going to work. It's likely not going to take off. There's just not enough momentum left. We're going to take a look at Bitcoin, because Bitcoin I was trading around the same time, and I'll show you one where I actually made that mistake. I made that mistake. I bought here on the breakout, and again, it's very similar. Broke the downtrend, broke above the support resistance line, and then here we had this kind of a big red candle. And you're like, why would you buy on a big red candle? Well, it sold down and it wicked all the way down back inside, but it bought back up immediately within 1 hour. Within an hour, it bought back up a full 1.5% to stay above the support resistance line and to stay above the downward trend line. And for me, that was a clear sign from the bull saying you will not get the price this low. You're not going to get the price this low. So that was my entry to come in here with a 1% stop loss, with a 6.3 to 1 reward to risk ratio. And again, it took a while to hit. It hit like 3 days in, but we came back to the trend. And this area here, I was able to draw the trend line because we have our starting point. And now we had this area where it kind of came down, but it would never really break below this line. And you could have just drawn a trend line here at the price action. So I took a breakout trade here and was immediately stop loss, because I was thinking we broke up and it failed. We broke up again and it held and it broke up, and we had 5 consecutive candles down, stopped right on the trend line, and then had a buy candle. So I'm looking here, I'm like, okay, cool. This is going to be an area where I can get back in and get another, 5%. But it didn't happen. And look how far we are away. Look how far above the trend line we are when we enter this trade. Now we fast forward a little bit, get out of this consolidation range, get out of this range, and we can see that we wicked down to the support resistance line again, and then that's where I bought here. So we're very close to the trend line. We had a bunch of candles in a row that never got back to the support resistance, so we're above it for a considerable amount of time. We retest, and then boom, that's our break to our next level of support resistance. So again, 4.7, that was above a 90% trade with only a slightly above 1% risk, which is 20% on my leverage. So still relatively high risk, but for the sake of this trading style, it is not high risk. And this is going to be a trade that I stay away from for a while, because we've got a while to go before we get back close to the trend line. And that's what I'm looking for. I'm looking for a break of a support and resistance range near the trend line, so that you have a secondary support level and you have known that you're not buying near the peak. This was going to be buying near the peak. If you were to try to buy anywhere around here, you're buying near the peak. So guys, that's it for this trading style, and it is very simple and you can catch it, but you have to make sure that you have confidence in drawing your support and resistance lines. And I will show you why my lines are where they're at. You had this mini peak here, and it was a support and resistance line here, and you go back, and it was a struggle, an area of struggle here. There was an area of support through here, an area of struggle here, support, resistance, it just fought this line. And you go up to the next level, this level here, resist, 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 prior to that, it was a support line. This was a area of support. The price didn't want to break below until it did. So these are why these levels are critical. And these are the areas that we're looking for. And then once this price breaks, if 44 or 45K breaks, Bitcoin could quite easily be back into a full-on bull market and back into a bull run. And then we're not looking at a major level of support resistance until almost 52K. So that could be one of the big moves. So with that being said, guys, that's the video. Remember, know where your trend is. Your trend is your friend. Wait for a retest, and wait for a retest that happens near the trend line. Do not hop in on a big wick, and do not hop in if the price is just too far above where you cannot get a very tight risk to reward ratio. You're not gonna be able to get every breakout. You're not gonna catch them all, and not all of them are going to be tradable in a way that you can keep a good ratio. Your risk management is the most important part of this trading strategy. So with that being said, guys, I hope you enjoyed, and as always, until the next time, peace.